you're going to find that I'm incredibly passionate about talking about anything to do with fundraising. And probably my biggest piece of advice to anybody when it comes to fundraising is understanding that you should never stop learning. And the last couple of years has been a real amazing learning experience for me. And probably 3 of the most important people in this process for me that have literally helped me to develop such an amazing understanding of major level fundraising are the people I'm about to introduce to you. And one of the things I'm always going to do, if you guys decide to be part of this community and come to all the real estate investor summits we do in the future, you're going to notice this Friday is always just for VIPs, and I try to keep it light and fun and have conversations. So we're going to do a little panel discussion right now around major fundraising. Is there anybody here in the room right now that is trying to raise over $1 million on a project or millions of dollars on a project? Yeah, this conversation is for you guys because the world that we live in today, it is more important than ever to make sure that if you're raising large amounts of money, that you follow the rules. And you can't follow the rules unless you understand what they are. So I wanted to have this panel discussion to help you with that understanding. Because the other side of the coin, and I should say this before we move on, I just showed you some really amazing strategies that I've used to raise millions of dollars from people that I know, from friends and family. But I also can't be naive about what I just explained to you. I've been building my following online for about 15 years. And I've now used that following I've built and the following that I have in order to help raise money. And I think that if you have to raise millions or you want to raise millions of dollars for any project, I think you should be doing that strategy I just showed you. You should be drawing attention to yourself for many reasons. But the fastest way to raise significant amounts of money is the way we're going to introduce you to now. So I want to introduce each of these people to you, and they can all come up here together. First, I want to introduce you to Andrea Workington. Andrea and I share a kindred background. She was a Vancouver cop. Now she has a major real estate fund, and she's an incredible developer. So a big round of applause for Andrea. And I want to introduce you to the guy that helped both Andrea and I set up our mutual fund trust. He's the co-founder of Axiom. His name is Dwight. Come on up here, Dwight. And last but not least, the guy we all love and hate, because he's the guy that's keeping us safe and keeping us out of jail. He's a partner at Castle's, one of the top securities firms in this country. His name is Doug McCartney. Come on up here, Doug. All right. So what I'd really like, if you guys wouldn't mind starting off, just to help people get a chance to know you, is just take a minute and introduce yourself. Talk a little bit about how you got into what you're doing now, your background, whatever you think's important.
Okay. Thank you so much for having me, Ken. So as he mentioned, I am a former Vancouver City Police Department officer, and I got into real estate back in 2005. And I moved to Alberta because it was the land of milk and honey. So I started like many of you did, which is with buy and hold one property at a time, and eventually scaled it up to apartment buildings and doing land development, which has led me to what I'm doing today, which is a $190 million project in Cranbrook, British Columbia, as one of my land development projects, which is how I met these wonderful gentlemen beside me.
Awesome.
As introduced by Ken, I'm Dwight. I'm part of a team at Axiom, and we are the founders of the company. And basically, we have a background as CPAs with some tax expertise. In addition, we are pretty conversed in all the securities laws and regulations. And our role is a support role. We come in, and our role is to create a turnkey product for you, or a structure that would allow you then to go and attract investors, and those investors can use their registered funds, RSP, TFSAs, et cetera, et cetera. And as you know, if you're out and seriously wanting to raise money, registered funds is where you'll eventually need to go. that's where people have their money to invest. And so our philosophy is that we're a support team. We come in, we say, your job is to go find investors and to run a successful project. Our role is to do everything in between. We create a turnkey structure so that you don't have to worry about it. You don't have to make sure that you're CRA compliant. You don't have to make sure that you're the securities compliant. We do all of that work for you. And so we consider ourselves more of a partner to you as opposed to an investor. That's your job. So that's what we do. We partner, come alongside, and help you create these structures that will help you facilitate access to registered funds.
Yeah, so I'm Doug McCartney, and I know everyone who's sitting up here with me. And I am a securities lawyer here in Calgary with clients all across the country. And I do a lot of setting up of structures to help people get into real estate or other projects. Ken talked about a hot tub company. You know, you can do anything like that. And I think a lot of people probably would be surprised to learn how many different areas of law are actually at play here. When Ken was talking earlier about, his happy, smiley face there, it was actually really, really subtle how he had just said what he said and was able to kind of attract a lot of attention from that, rather than putting in, here's a hockey stick graph, come make oodles of money. And you know what I'm saying? So that's the securities element, is how you raise the money. The tax and RSP or TFSA element is something that we work on with Axiom a fair bit. You have to get the properties. Sometimes you might have it in a structure that's not going to work or be very, very tax efficient when you're trying to get returns to your investors. And I'm here because I was talking to Dwight and his partner a very long time ago about a business venture that I was setting up with some partners of mine, and we were trying to raise capital, and we wanted to be able to access RSP and TFSA money. And so I believe that was one of your first vehicles, and I can tell you that in the kind of 5 or 6 years since, 85% of the funds that we've raised are from registered accounts. So if you can figure out a way that works for you to tap into registered accounts, and then you can take the things that Ken and Andrea are going to tell you about how to talk to people while still being compliant, and then you can finally get yourself to be brave and to make these videos and to do what it takes to get the money. If Dwight and I put together a great car for you guys and it's got no gas, you're not going to go anywhere.
Yeah.
Right? So you have to know what you're doing, and I'm really looking forward to talking to all of you about it.
Awesome. Before we get into mutual fund trust, I just want to push Doug to make some comments around FFBA. And because I said a lot of really general statements when we were talking about friends, family, business associates. You can talk to these people. You can borrow money from these folks in direct conversations with them. But a lot of people, Doug, in Canada are stretching that exemption group, friends, family, and business associates, way beyond what the law dictates that should be. So I'm just curious if I could just get some general comments to kind of rein in people's thinking into, like, what exactly is friends, family, and business associates, and where does the line of the law stop? I don't know if I'm asking that question the right way.
So except for Ken Dunn, you probably all don't have as many close friends, business associates, and family members as you think. So, and I can tell you, almost any time you raise money, if you're using a promissory note, if you're selling a partnership unit, if you're selling a share, anything like that, they're all securities. So you should be compliant. And to be compliant, you have to get the person you're selling to confirm the relationship or their status to you, and usually you do that contractually. Sorry if I'm talking like a lawyer and it's really boring. But
he can't help it.
So for your close friends, I can tell you that the Securities Commissions actually, when you use this exemption and you file it, they'll actually come back and say, prove to me how this person's your friend, right? So it can't be someone that it would probably not be someone that you met last night, okay? It's really unlikely to be someone that you met last night. It's usually a relationship that's gone over a couple of years, and you have to know it's a real close friend. It's not someone that you go to church with. They've actually said things. It's not just because you're in the same bowling league. It's not necessarily because you go to the same church. It has to be something more. You guys have to have created more of a relationship, because the securities relationship that you're relying on is that I'm so close to this person, I'm not going to defraud them, right? That's the basis for it. So it really does have to be a pretty good friend of yours. With your close business associates, that one's obviously a little bit wider, right? But let's say that I know Andrea, and Andrea and I have that relationship, and Ken is her friend, and I've never met Ken, and I'm selling the security. It doesn't work, right? Because I don't have that direct relationship with Ken. But it is a business relationship, and it can be one where you've invested together or worked on projects for several years. It can be one where you're in a business group. But again, it has to be one where you are able to tell a securities commission, both sides of the equation are, the friend or the business associate, as well as the issuer. You're able to sign and declare, yes, I am this friend, and you actually have to explain it. How long has it been? What is the nature of it? And that's all in a subscription agreement. So I didn't quite say this is the defined term, because they don't actually say in securities laws what it is. They tell you what it's not. A mere acquaintance is not a close friend. Ken talked about raising from accredited investors and using a term sheet. And I don't want to just start going there, but I love the accredited investor exemption, and I think that you should all be trying to use the accredited investor exemption. If I am going to buy, or if I'm going to sell a security and a person is my close friend and an accredited investor, I'm going to use the accredited investor exemption because it's beyond reproach. And Ken talked about that it's usually people who are, the basis for the exemption is that the people are able to withstand a financial loss on an investment. So they have income for the last 2 years of $200,000, or with their spouse combined $300,000, or they have net assets of $1 million, not including their home. And again, when you sell the security, they fill that out, and they confirm. That way you know, yes, they've confirmed to me that they are. So, sorry, I'll let you keep going.
No, that's exactly what I was hoping you would say. There's one more thing that I want to just get you to talk about, and then we'll jump into MFTs. As you know, we've talked at length about this. Inside of the syndicate, I've built a list, of over 7,000 private lenders in Canada. And I use that list to help people get mortgages. So there isn't an established relationship with those people. But in each of those cases, both parties are using lawyers. There are legal contracts put in place. The money is secured against the property. And so it's something I'd just like you to touch on based on what you just said, because one of the things you just said that I think is really important for everybody to know is that securities laws and the rules are not articulated in a way where you can say black or white. And so there's going to be exceptions to everything. And the biggest piece of advice for everybody in this room that his comments I wanted to go to is that in all cases, 100% of the time, have a fucking lawyer on your team and let them help you make the right decisions. So anyway, back to this lender's list idea and doing mortgages. How is it that if you can't do anything, if it's not friends, family, and business associates, how can we borrow money through a mortgage from somebody we don't know?
So on that one, again, it's going to be kind of fact specific, right? I think two people could come to me with a very similar fact, and it's a different answer. Mortgages are kind of their own unique security. If you're going to get into syndicated mortgages, then you're actually into a whole different set of rules, right? If you're talking about mixed, you're going to get into a whole other set of rules. The person that is granting the mortgage, it may or may not be a security, but private lending is a different relationship again. That's why, when Ken's talking about these things, what Ken is doing kind of maybe as a facilitator, but it's an unpaid facilitator, so he's not tripping over any securities rules there. If you put two people together and take a piece of it, you could be offside securities rules, right? So you always have to think about these things. But what he's talking about there, where Andrea is looking for a project, I decide to fund it myself, and I put a mortgage on it. You should be okay, depending again on the paperwork. Like, you'd want to do the analysis right up front and see whether or not you've somehow wandered over to securities rules. And if you were going to do it and say, well, I'm going to sell 20 pieces of the mortgage, now it's getting a little bit more scary, right?
Yep.
So again, sorry for saying, come see me every chance that you get, or give me a call. We're at the Castles booth right out there, which, by the way, is the least sexy booth. It's got no candy. It's got no gold coins. It's got no QR codes.
It's the exact perfect lawyer's booth.
Yeah. So again, if you're going to be doing, private mortgages, you can. There's ways that those private mortgages can also access registered funds as well. I think that some of the people at this table know how to do that as well.
Yep.
So again, it really pays, and I'll tell you, when we were meeting our friends, earlier today.
Yep.
I met someone and I heard a story, and it was fantastic, but also it was kind of, I wish I'd known, right? And so, do try and do a little bit of work up front, even if it's just talking to other people in this room to get their experience first, and then you can say, okay, here's who I need to talk to take it to the next step.
Excellent. Okay, Andrea, what I was really hoping you could do for everybody is explain to people, when you first got started in real estate, how you were raising money, and then what brought you to the point where you needed to figure out something else like the MFT that you're doing now. What was the problem that solved? Why did you do it, and where's it taken you to because you did it?
Yes, well, my first joint venture partner was my Uncle John. And so, like many of you who, once you run out of your own money or your own mortgage qualification, you partner with people. And so I did a lot of that on single-family houses and fourplexes and apartment buildings. But when I got into real estate developing, which requires a lot more money, a lot more time, and different types of financing, because when I first started, I didn't have any experience in land development, I found it very challenging to find lenders who would lend to me. So through my mortgage broker, I was connected to Dwight and Evan at Axiom Capital, and they said, this is probably something that you should look at, a structure that these gentlemen have. So I actually started out with a single-use structure called a subco, because it solved my problem. It was inexpensive, relatively, to get it started. And, they hold your hand through the whole process and help you, understand how to use the structure to the best advantage, which of course is using registered funds. So that's kind of the problem that they solved for me, was how can I raise large amounts of money legally, ethically, morally, and all that kind of stuff. So we started first with the single-use structure. It was quick and easy in securities terms, timeline terms, to set up, and then eventually went with the MFT. So when I looked at how long my project's going to take, so I'm already 3 years into it, it's going to be another 5 years, the flexibility of the mutual fund trust really made a lot of sense to me. Yes, it costs some money to set up, but I looked at it as, if I have a large enough project that can absorb the costs involved, then it makes sense. So, if I was just buying $1 million property, probably not worth my time to set up the MFT, but could use the subco if I needed. And so now that I have one, now I'm looking at how do I optimize it, How do I structure things moving forward? How many more deals can I do? And because of the flexibility of the mutual fund trust, it made a lot of sense to me looking at like a legacy product that I can use this over and over and over again. Yeah.
Thank you.
And by the way, I was the first
Mutual fund trust created by Axiom?
Through Axiom, so yes.
So Dwight, let's talk about, let's just go back and answer the obvious question. What the hell is a mutual fund trust? Why is it needed? What does it do for people? Like, just do the whole pitch so people can understand what an MFT actually is.
Yeah, a fair amount of people here probably maybe have never heard the term mutual fund trust. And but I would gather a lot of you in the crowd here have heard of a general partner and a limited partnership, because a lot of real estate is done through a limited partnership, and that's just a very tax-efficient way of doing it. And a mutual fund trust and a limited partnership look a lot alike and act a lot alike. So you can, when you think in terms of a limited partnership, and you sell your investors units in a limited partnership, while you sell units of a mutual fund called mutual fund trust unit. So it looks like, it acts like a limited partnership. And as you may know, in a limited partnership, the general partner runs the limited partnership. And in a mutual fund trust relationship, you have a trustee. So the terms are new to you, but it works in the same principles as a general partner and a limited partner relationship. The big deciding factor that makes the difference is mutual fund trust units are acceptable for RSP investments and TFSA investments. Limited partnership units aren't. So that's the big advantage. So they look like, they act like very similar, but the big key differentiator, of course, is access to registered funds, where your investors can now say, I can use my registered funds. That's fundamentally the big difference. Andrea referenced a subco, but what we do is we have a couple structures, and the mutual fund trust, unfortunately, isn't free. But we do have structures that where you are at in your career in real estate development can help you along, and they're far more cost effective and more efficient and more cost less, basically. So the other thing is that the securities laws around the mutual fund trust are also pretty definitive, where you need to comply with certain ways you would offer mutual fund trust to the general public. That's in essence what Doug was referring to. You're making an offering to the general public. Sometimes they're your friends, sometimes they're close business associates, and sometimes they're to accredited. And then sometimes if you even go further through an offering memorandum, you can bring in eligible investors. So those are kind of the nuts and bolts of a mutual fund trust.
So essentially, the mutual fund trust becomes the company, the vehicle that allows you to raise the money, and then you decide what you're doing in that. And once you figured out what you're doing, then you go back to your securities lawyer that's going to paper it, that's going to write all the documents to allow you to do it.
Yeah, and I might just add, setting up a mutual fund trust is, we do it, you own it. You only do this once. Yep. So you own it, you can use it as long as you want. You can run as many projects through it as you want. So it's not that you have to create an MFT every time you want to do a project. So you own it, and we stay with you even after you've bought it, set it up, and run it. We're happy to stay with you in an operational point of view.
Yeah, and for anybody that's interested in going down this road, I decided last summer to start a mutual fund trust, and we just launched it a couple days ago. But when I started looking at the options to create it, I 100% decided to use Axiom, because what I love about them is Dwight and Evan, the founders, have been doing this for a little time, a couple minutes.
Oh yeah, more than a year.
And they know the laws so well that they've figured out systems that they use to make the entire journey so much easier. And I'll give you one of the most basic rules about starting an MFT that they solved the problem to. When you launch an MFT, in your first year, you have to bring in at least 150? Right. 150 investors. And for most people, I'm going to show you a system later today that I launched my MFT on Wednesday night, and in 1 hour on Wednesday night, I booked 97 appointments of investors to put money into the fund. Anybody want to learn how I did that? We'll show you that later. But for a lot of people, getting that first 150 people, I can tell you 10 stories of people who started MFTs and didn't do that. And if you don't do it, the government shuts down your MFT, and you still have to pay for everything. I'll let you explain how you guys help with that, because I don't want to say something incorrectly about it, because I know it's very specific.
So fundamentally, for an MFT to be certified by CRA, you have to have a minimum of 150 investors come in within March 31st of the following year that you set it up. So if you set up a MFT January 1, you would have 15 months to bring all those investors in. If you started December 1, you only have 4 months to bring them all in. And when I say bring all in, you have to have those investors vested. They have to have cut their check and everything. And if you don't, this is the big drawback. If you don't, then every one of your investors that you've brought in as you've been working along here is deemed, and they've used their registered funds, is deemed to have withdrawn that from their RSP, and they're going to be taxed on it. Okay, so that's pretty negative. I would think those might be the only times those investors would invest with you ever again. And so we bring in the 150 people. So we provide it turnkey. So you say on Monday, I'd like an MFT. In 3 weeks, we have our own pool of investors that come in and do that for you so that you can, with certainty, move forward, right? So when I say we come alongside you in a turnkey, it's that component for as it relates to being certified from CRA perspective, we manage. So we take that uncertainty out for you. And it's an uncertainty that is very negative to your investors if you don't make it. Our phones start ringing now by people who say, I'm 40 people short. March 31st is coming, right? It's an ugly situation, that's all I'll say. You know, it's not a happy situation. And you really don't want that. So that's part of it. Maybe I'm too negative, but that's the reality. I think you need to know that, you know, when you set out.
And you've heard both of them kind of say it tongue-in-cheek. It's not cheap to do this. The other thing I like about working with Axiom is even the fee structure, because it's 6 figures to set one of these things up, is you guys have really focused. And what convinced me to work with you is the way that you are willing to partner with me for the long term. So you helped me set it up. You took care of the 150 investors. You got the whole thing going. But you're also helping me on the back end, and you're going to manage the whole thing for me forever. So when it comes to paying, in a year from now, I'm going to have 5,000 or 6,000 investors. All I have to do is send one check to you, and you're going to take care of everything else.
So an added feature that we do, a service that we provide, you don't have to, you don't have to use this, but we will manage what we would call the back end, which is making sure that you file all your tax returns for all your entities, the MFT, and all your companies that you do in your projects. The other thing is we would do your distributions to your investors. We do statements to your investors, if that's monthly or quarterly, hopefully quarterly. And we do all the filings and management of it. And that, a lot of times we find developers who might have their own accounting staff. Their accounting staff don't want that kind of, it's a different kind of right?
Yes.
It's a different, like we manage her back end, so we shouldn't say it that way. We manage your administrative function. Strike the record that I said that before.
I think the other thing is that's relief to me is when you have investors who've never set up an account at Olympia or Western Pacific, and their back end handles all of that for you. Yeah. So they really help. From the time somebody says yes to put their money in, I connect them to their staff, and their staff take it from there. They help them fill out all the forms, send them, electronic signatures, so people aren't having to figure out, well, where do I put my name and what do I sign?
Yeah, and the other part is that, as those funds are coming from Olympia to probably Doug at Castles, we coordinate that for you on your behalf as well, and work with Castles to ensure that then those funds get to your project.
Here's my favorite part of working with these guys and Andrea, and why every single person in the room, if all of you in this room don't retain Castles to help you with your real estate portfolios, then I've failed you this weekend. That's how much I believe in that company and in Doug. But what I want to do right now is actually present these guys with a real purchase I'm about to make. I won't tell you exactly where it is, but my friend Andrea here just helped me find 7 acres of land in a prime hospitality environment in the middle of a city that we're going to buy for $1.4 million or something like that. My plan is to do it through the MFT, but I don't know if I'll bring the MFT up front. I'll probably just use some loans to buy the property. But Doug, right away, I'm thinking about the conversations we've been having over the last couple of weeks about tax efficient ways to do this because I'm going to buy this vacant land. I'm going to develop it, turn it into probably a 80 to 100 room hotel, a full Nordic spa, and take advantage of what we're doing. And I'll buy the property, but then I'll want to use the MFT once we figure out what it's going to cost, raise all that money through the MFT. So based on our conversations lately, just for my benefit now, it's like free advice on stage. He can't charge me for this if I'm getting him to do it on stage. Or maybe. But if I'm doing something like that, and my intention eventually is to put it into the MFT where I'll be selling a part of it as a security, how do I start? Like, what's the right way for me to buy the property and set it up so that I can make it the best tax strategy, the easiest process from end to end?
So that's a really good question, and I can tell you sometimes people have come to us, great projects, and the way they've got it set up isn't necessarily the most tax efficient, and so now you're going to run into perhaps land transfer tax issues where you can't do some sort of a rollover. But when Dwight was talking about limited partnerships and mutual fund trusts being very, very similar, limited partnerships are great. And so I'm going to start talking with my hands a lot, right? So you've got your mutual fund trust sitting on top and your registered funds come in there. A mutual fund trust actually cannot carry on business. It has to own securities of something else. So you have to find something else to use that is going to be tax effective so that when you start making returns or returning capital, you can run it back up your chain without having any tax. So you're going to use limited partnerships, right? So what I think that you should do in that situation to offer yourself the most flexibility is when you're going to do the deal at the very beginning, have a purchase contract that's assignable. In case you want to assign the contract to a limited partnership and you have the limited partnership then close, and that's very, very flexible because the limited partnership can borrow funds, right? That's not necessarily always the case. I know that Andrea's kind of hit a sweet spot doing corporations and loans to the corporations also works, but she's thought about it at the very beginning, what her offering's going to look like and what kind of investment that she's going to offer to her investors. So generally speaking, you're going to have probably two different types of investments that you're going to offer or think about offering to your investors. One's going to look like debt, and it's probably going to have a loan feature in it. And if you do have a loan feature in it, then you could probably be okay keeping it in a corporation. Corporations are great to limit liability. They're really not good for tax. If you want to offer, it's a project where it's going to be longer, you're going to have to stabilize it, you know what I mean? You're going to have to refinance it, so you want to offer something that looks more like an equity carry, then you should put it into a limited partnership. And you figure out then, well, what's it going to look like? At some point, you want to return the capital,
Yep.
right? So you're going to have to write a limited partnership agreement whereby you return the capital. You're probably going to want to offer your investors a preferred return before you take your own money out. So you'd have a preferred return, something like that. And then maybe you're going to split it with them, right? And that way now you can model what your return's going to look like because you've got a as-is valuation, you've got an as-built valuation. You run all these numbers. These are all what you're going to have to do to actually comply with securities laws, get it sitting on a shelf with the trustees so that you can take registered funds, and then be able to talk about your offering. So hopefully it doesn't sound too complex, but that would be a conversation that we would have. Yep. And then ultimately you and Andrea have to decide how much equity do we want to have in this at the end? And so do we want to structure it more like debt? Or, you know what? I think that this is something where we can offer a really nice return once we get it stabilized and we refinance or we sell it to a third party. So we want to do a carry. And on the carry, it's a different type of investor. Someone's going to be looking for something like debt. They want whatever, 15%, 2 years. They want to be out. A carry interest where you're going to be in it for a long time, 7, 8, 9, 10 years, it's a different type of investor and it designs differently because you don't have to start repaying capital right away or you don't have to make any return payment right away because you're still building the project.
So let me give you exactly how I want to do this. I'm going to buy this place for 1.4. I'm going to figure out the full construction budget for the place. So it's probably going to cost me $30 million to build this. So I'll be into it for $31 million. I'm going to go bring in equity. So I'm going to sell probably 30% of the project to raise about $15 million. So I'll get that $15 million in. Those people are willing to give me the money until I refinance it. So the other $15 million I'm going to borrow from Meridian Bank. And I'm going to borrow it because I'm going to get an stabilization appraisal done that's going to tell me once it's up, it's open, it's running, it's going to be worth $60 million. So based on having that appraisal done up front, I'm going to get all of this arranged. And the idea would be is once it's stabilized at a $60 million valuation, Meridian will refinance the project, give me $30 million, which will allow me to pay off their construction loan and give those initial investors back their capital they put in, but I'm going to let them keep the stock, so they'll keep making dividends over the long term. So that's the whole plan. How many people want to get involved in that project with me, by the way? Is there anybody here that wants to? Okay, I'll tell you more about it later. I have to figure it out first. Maybe I'll pitch it this weekend. That'd be freaking cool. But based on, that's exactly how I want to do it. Step one is to buy the property through an LP or have it set in an LP. Is that?
That's really, really important. Either have your contract assignable so that you can, put it into an LP or buy it in an LP, unless you're sure that you're going to use a corp. Because if you actually buy the property and heaven forbid, you start working on it and you've raised the money and it's sitting in a corp and now you've got notes in a corp and you've got shareholders in a corp and then you want to put it into an LP, you're actually creating a bunch of tax issues that sometimes people like us can't even structure you out of.
Great. So I buy the place in an LP. Then I want to raise $15 million from accredited investors or that other, what's this other, I can never remember that freaking name. Eligible investors. And the place is going to be worth $60 million, so I'm selling 30% of it to raise $15 million. How do I do that through a mutual fund trust?
So basically, you would raise the money portion of that discussion through the mutual fund trust by offering your investors mutual fund trust units. Okay, so the investor will invest into the mutual fund trust unit, and then the mutual fund trust is going to aggregate the $15 million, and it's going to then purchase units in the limited partnership that Doug is talking about, which ultimately holds and runs the project. And then that could be done by way of a loan. You might borrow the money from the investors, and then the MFT would lend the money out to the LP below, same terms and conditions, that flow through idea, and then you work you develop the project. And so when the refinancing happens, the LP would then pay back the loan to the MFT, which then pays back the loan to your investors. So that kind of is a procedure of how it works. And if you say, well, I think this is such a good deal that I'm going to offer the investors to have a continued carry, as Doug calls it, where they get to continue to be part of the operations and future financing or maybe a future sale.
Yeah, I want them to make 30%, to get 30% of that revenue until I sell the place, and I want them to participate in the exit as well.
Yeah. So Doug's very, very smart, and he can write so that MFT unit that you give your investor will have clauses associated with it. It'll say you own the unit, you paid $1,000 for the unit, but you have a right to a preferred interest, you have a right to get your capital back, and you have a right to continue to participate in the profits of that what are you going to call it, hotel or just?
I don't know yet, something.
The
Resort.
To get right into the dirt on this one, you're going to have to offer some sort of participation. And earlier Ken said, and I've offered royalties, right? Because again, tax is always, like securities laws, none of us wants to go to jail, right?
Yep.
Tax, again, none of us want to go to jail, but also we don't want to inadvertently do something that's not tax effective or worse, has a terrible tax effect like Dwight was talking about, an MFT where they don't get to their 150 by March 31 of the following year, right? So if you went down into a limited partnership all the way, Ken and whoever Ken's partners are can own one class of units, and the units have these characteristics, whatever you design them to be. The investors, through the MFT, so it's like there's a couple of elements in the chain on the way down, get whatever else you design it to be. And you can get as crazy as you want, which I don't recommend, because if you hand someone a document, say, I want to invest in this, and they can't understand it, you've lost your audience. Hopefully you're going to tell people kind of keep it simple so that, you know, I can explain it in a minute. I don't have to get out a big flow chart and diagram, right? And then so both classes, it will say what's going to happen in certain events when we refinance, right? When it starts to cash flow, if I sell it. And you can do the same thing with debt if you want. You have to be a little careful with the kind of carry piece that you talked about this, you know, you want your investors to get up to 30% because they're going to stick around for a long time. So you have to think about what that's going to look like, and you've got some kind of valuation issues at the very beginning. What's it worth on day one? Like these are all actually the conversations that we will have if you're doing a complex offering like this.
You know, Andrew, what I'm really excited about with this property is that, you know, when I launched the MFT, I sent Doug like 4 term sheets, 4 silos right up front. These were already projects that I was in. We're trying to figure out how to mitigate the tax risk on it. They're like big ugly bags of dirt that he's got to try and clean up and make look good. But in this, and I think you've probably already been to this point, what I love about it and why I think everybody in the room should use these guys is now, because of the relationship and we're in business together, I can arrange a Zoom call with Dwight and Doug when we're putting the offering on that place and plan out the whole damn thing. And because they both have a vested interest in what I'm doing, they're going to take the time to educate me at the same time, to teach me how to do this. Because there's probably about half a dozen things that Doug just said that all I heard was wah, 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 wah. And what I love about it, because I'm working with them, is I don't have to understand it well. I have to have people on my team that understand it well. And have you had those experiences with these guys already? Because you've been working with them for a while now.
Yes, yeah, it's been more than 2 years, I think, since we started, maybe 2.5 years with the initial structure of the subco. And yeah, it's been really easy to work with these gentlemen because they just make it so simple, which allows me to make it very simple to my investors.
Yeah.
And it's kind of like having a superpower of simplicity because a confused mind says no. And so I really appreciate that I don't have to understand all those intricate details. I just need to be able to translate it to the investor what's in it for them and how they're safe and secure in this investment opportunity.
Yeah, totally. One last thing about mutual fund trust, Dwight, that I want you to just touch on. With Dunn Investments Mutual Fund Trust that I just launched, my plan is to scale our gold business, our gold mines, up to hundreds of millions of dollars in production, and I'm going to do it through the MFT. Technically, I'm buying real estate, but in addition to that, I also own a hot tub company that we're putting together a business plan now to raise $10 million. I'm going to do that through the MFT. I'm buying a sauna company that makes cedar saunas through the MFT. So this vehicle also, for those that have interest in doing things outside of real estate, you can use the same vehicle to do that.
Yeah, I mean, we present it as a real estate vehicle because that's most common. But the MFT can be used, we have these silos, okay? So silo would be your project 1, 2, 3, 4, and now 5, and 6, and 7. But the silo doesn't have to be real estate. At the end, at the bottom of this corporate structure, it can be Ken's Hot Tub Company. And you can bring investors who use their registered funds, comes through the MFT, to buy the hot tub company. Or the property doesn't have to be in Canada. That's also the other thing I want to state. It can be
anywhere in the world.
Anywhere in the world. The property doesn't have to be resident in Canada. It can be anywhere in the world. So that's kind of an advantageous as well. Your investors, primarily your investors should be Canadian. I want to just say that because this is accessing registered funds, which is a Canadian feature. So you primarily, there is a way, and we can work around that too, is if you say had an American investor who wanted to come in, we can help you with some of the issues associated with that they can also come in the MFT. But it is a very tax efficient, that's how we market it, but it's very effective and flexible. It's very flexible in terms of what you're offering your investors, and you can offer different terms and conditions to certain types of investors for one project. So you could have offering one, which is just borrowing from people for the same project. You could say to this group of investors, I'm going to give you equity on the same project. It's a pretty flexible vehicle, can be structured. So you're right. It doesn't have to be real estate. Primarily is. That's what's primary use, but it can be property that's outside of Canada as well.
One last thing that I want you to comment on, Dwight, because I think this will resonate with a lot of people here. If you heard what I was talking about earlier on this place that I'm looking at somewhere in Alberta on a very beautiful lake, I'm going to buy it for $1.4 million, but then I'm going to figure out how much it's going to cost. Then I'm going to raise the money for the MFT. Well, if you heard what I said in my opening training, I never, ever use my money to acquire properties or to renovate properties. I only lend my money passively. I borrow the money from other people. And I want to, like, our corporate goal is to literally build $1 billion real estate portfolio in the next 10 years, which means buying lots of properties at the same time. And I wanted to figure out a way to do that and have access to the capital that I can grab like this. If I see something come up, I don't have to go looking for it. I already have it, and I can use it to acquire properties. And when I talked to Dwight about it and consulted with him, he helped me to understand that I could build that as part of a fund, a bridge fund, if you will, where I'm going to raise $10 million, and I'm going to use that for short-term mortgages and loans to acquire properties for all the other parts of the mutual fund trust. And it's another way that you can leverage that.
Yeah, I mean, again, this vehicle is very interesting. It's very flexible, and it took us a while to develop that it's so flexible. And you can make it act like a mortgage investment corporation.
Yep.
And it's not. So it's very flexible. It really is designed. Every project is different. We sit here and say, oh, your real estate projects, as if you all fall into the same category. I seldom find where they look alike. They're all different. And so, our structure is designed to meet your needs, your structure, your circumstances. And so, yeah.
I just thought of something. First of all, have you guys appreciated the time they've been with us? Was this worthwhile? I'm wondering, first of all, I got to tell you, I just sent all of you a text with a link to my YouTube channel. I want you to all go there right now and subscribe to the channel. I'll tell you why. If you're interested and you want this, I will take this session and turn it into a professional YouTube video and launch this entire session publicly on YouTube. Would anybody want to go through this again and take some more time to listen to this conversation? All right, so go ahead and subscribe to that channel, and we'll get that out next week so that you can ask more questions, do that. And what I'd really appreciate if you guys would do now is stand up and show your appreciation to these amazing panelists. Thank you, guys. All right, thank you very much. Okay, one last quick thing before we go to lunch. If you are wanting to get into the big leagues, if you're serious about it, you've got big projects that are on your horizon, make sure that you talk to Doug and Dwight. Doug actually came this weekend with a couple of the lawyers from his practice, so there's 3 of them out there. I use Doug's company now for everything I'm doing. I'm now using Doug's team for acquisition. So they're writing the agreements to buy the gold mine. This new project that we just found the land today, right here in this room. Andrea is helping me acquire it. I'm going to probably buy 7 acres of land in a major tourist destination in Alberta by a lake before the end of today. And that's because I have the teams. I have the people to help me do this stuff. And I don't worry about money because I have the mutual fund trust. Oh, I got to tell you one more thing. So actually, how many people, I didn't ask this earlier. If you're in the syndicate, just stand up for a second. I always curious about how many people actually get to the events that are in the syndicate. Okay, great. Thanks, guys. You guys can sit down now. This is something for you. Because you're in the syndicate, we are so what we're doing in the mutual fund trust is we're going to create a bridge fund, which is $10 million, and we're calling it the Syndicate Incubator. So I'm going to use that money to buy properties, but what I'm also going to do with that money, because everybody in the syndicate is part of my FFB&A, I'm going to lend that money to people in the syndicate to do flips and real estate deals to make this journey even easier for the people in it. The people in the syndicate are now going to have the lenders list, 7,000 people across Canada that will do mortgages for you up to 100% and beyond 100%. And now you're going to have on top of that the syndicate incubator fund so that I can promise you you're never, ever going to have to go looking for money to do a real estate deal. You excited about that or what? Yeah. Now, we're going to lunch now. Lunch is included for everybody that's here. Lunch is at the other end of the hotel. There's a room down at the other end called the McKnight Room. It's all set up for you. Beautiful lunch is all laid out. If you're not in the Investors Growth Syndicate, I'm going to tell you this really, really quickly. It is a real estate mastermind group. It's not a coaching program. A mastermind group means that everybody in it contributes to each other's success. And if you join it, what you're going to freaking love, it's probably got the most sophisticated, successful group of real estate investors inside of it. We have fund managers in it. One of the top mortgage brokers in Canada, Kyle Ford, who's going to be here this afternoon, is a member of it. Andrea is a member of it. We had huge fund managers in it. And the reason that they're joining, I tell them if they join, it's 13 grand to join it. And if they join, I will personally build the entire marketing system for them online. Facebook ad funnels, webinars, the whole 9 yards to help them scale how they're raising money. But I make them commit to one thing. I say, I'll do it for free. Those people, to build an online marketing system for raising funds, they'll normally pay $50,000 to have one of those created. I say, I'll do it for free if you join the syndicate on one condition. We do a live call every Sunday night at 8 o'clock. And we do a live call every Wednesday at 12 noon. And I say, I'll build all your marketing systems for you as long as you promise that you're going to be on those 2 calls every week. The reason why is last month we had 55 new people join the syndicate. About 18 of them were incredibly successful real estate investors, but 38 of them were brand new. Had never done a deal before. You know why they joined? Because if they join, I personally help them raise all the money they need for their project so they never have to use their own money. And all those big titans in real estate are guiding them and mentoring them all through one community. How many people here are brand new to real estate? Have never ever done anything? You're just here to figure this stuff out right out. Raise your hands, good and high if you are. How would you feel about joining a private community with some of the top real estate investors in Canada that are going to answer all your questions, help you not to make any mistakes, and I'm personally going to make sure you get every dollar you ever need to do real estate deals? How many people would like to know more about a community like that? Yeah. So what I want you guys to do over lunch is find somebody that's in the syndicate right now. Everybody that's in the syndicate, stand up one more time. So you guys can now see who they are. You guys can all sit down. This is how much I believe in the syndicate, is I can ask you, talk to any of them. They'll tell you the most incredible things about it. But let me give you guys a little tip. All the new people, go find one of people in the syndicate and offer to buy them lunch. It's fucking free, right? Anyway, we are back at, let me just find my little agenda here. Lunch is until 2 o'clock. We're going to be back here right at 2 o'clock. Enjoy your lunch. Go meet somebody new. We'll see you in a bit.